There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
European markets are slipping and gold tries to climb back from the depths. Investors await Bank of America earnings today and an economic snapshot from the Fed's Beige Book. I'm Brittany Umar and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are down about 12 handles this morning. Probably the open traders would have expected to happen yesterday. You know, up until this point, longer-term investors haven't had as much to worry about. But are we starting to see signs that we could finally get that bigger correction?
Well, there are two things that I'm looking at that technically could be a problem. One is the breakout failure. If you recall, we took out that 1574 pivot, went to 1597, and then quickly that got removed. So that means that a lot of shorts probably got squeezed into that last move. Some people not involved in the rally, might have chased, and then lo and behold, we came right back. So that showed you that people who were getting in there for momentum and follow through left. Then all of a sudden you started to see that wide-ranging engulfing bar that we had on Monday. And like you said, Brittany, even me, I think that day on Monday is when a lot of traders got rid of a lot of their loose longs and probably went home short, hoping that yesterday you'd get a 10-12 handle move lower in order to cover some shorts and then maybe even play a bounce. But instead, market bounced up yesterday on a gap up, so it gave you very little wiggle room to make any money long, but then held where it had to, where the bears made a bit of a stand.
Now, can you show us a visual of the levels that you're watching in the S&P as we head into today?
Yes, because I think that it's very important to show where we stalled yesterday and potential support and this new pattern that we've been talking about, since early this week. And if you look here, this pattern that I'm talking about is the potential of this head and shoulders top, where here is your left shoulder, okay, with a peak here at around 1573. Then we squeezed through into new highs to 1597 and quickly negated it, showing you that all these people that covered up here were probably a little upset. Anyone that chased got trapped. And then yesterday was, it took back a little bit more than what the bears would have wanted, but that's what the market's been doing with the computers and the algos. They kind of know how they could push the envelope, but this is where we held. So now today we're opening lower. So right here on this level is you have 1552. If we were to start breaking below this level here, I do think that a lot of stops will get triggered. And then your next level here is right around 1541, which is the 50-day. So this right here would be, I would say right shoulders typically take a little bit longer to build. So I don't know if it's going to just trigger today. But overall, this is your first bearish pattern that potentially could be built. It's the first time, like if you look here, when you had that engulfing down day, you had a reversal, and then we took back more than half and went right back to the highs. Here, took back a portion, but now we're opening lower. So I think that next few sessions are going to be important. I think that if you went to cash as a trader, maybe if you even have more of a macro approach, I would lighten up and take a little bit of risk off the table.
Now, what if we took a look at what happened last year around this time? What can we learn from that?
Well, last year, first quarter, we had a tremendous move, very impressive, and then you started to get the head and shoulders top pattern being built into the second quarter, which if you look here, sometimes you could learn from past history, so to speak, and that took place right here. Okay, this was last year. This is when we had the wedge formation coming into 2012. We broke out above it. You had a really nice move that also followed the 8 and 21-day moving average. And then in March, here was your left shoulder. In March into April is where you had the head built. Then we came in, started to establish this neckline, rallied back up into earnings season, into the end of April, and then boom is when we broke this neckline, and you saw a 6-7% correction. Okay, which retested this breakout, which for us would have been which for us right here would be, if this transpires the same way, would be probably around this 1474, which would be a retest of this prior breakout, which would be then, somewhat symmetrical. So I'm trying to paint the picture here. Let's wait for the market to confirm it, but there's no reason not to have, a few different plans on the table, because when the market moves, it's fast, and you need to know how to react very quickly, just like in gold when it broke that macro pattern on Friday.
Right, yes. And gold and commodities are still a focus. They tried to muster a bounce yesterday, but gold opened higher, was unable to hold the majority of its gap. Looks like it's poised to go lower again, but at this point, is it hard to chase to the downside?
Not really. I just think you maybe do it with less. And like we talked about being prepared to have quick feet, gold itself has been in somewhat a downtrend all year, since making the highs, months ago. And then you had that intermediate area in gold, which wound up breaking right here. We talked about that. We talked about guys like me who trade intermediate trends. This could have been, could have went to the upside, but it resolved to the downside. I was long gold here. This is when I got stopped out. Some guys actually, switched to short real quick, and then you had a quick move lower to macro support. Not much of a bounce. And then on Friday, you did have about a half hour. Or maybe less when it opened below this area. We talked about 148 to 149.50. It opened right around 148, hovered. Okay, if you look at the open here on this, you'll see it was 148, 65, and then it ignited to the downside. So if you stopped yourself out there at this macro support, as a gold bull, and you said, okay, a lot of guys are saying, well, I'm a macro gold bull. Okay, well, I don't care if you're a macro gold bull. If you could save yourself some money, and then boom. And now all of a sudden, we're at another, little bit of a support reference point coming across. But look at the bounce here. It was not really that, that strong, pretty feeble. It might take another day or so to be here, but if it starts to give way from 130.50, you could probably see some continuation in this trade down to what I think could be 123 to 127. So go back one more time here, and that takes you right to, this little level here. Okay, which could be the next poise, and then where it broke out from, which is right around here. So ultimately, I think gold gets here before you get a more sustainable bounce.
Well, while we're talking weak areas, we've talked about the weakness in sectors like the Russell, the transports, and the home builders, and how we can watch those for clues about market direction, the signs that we may go lower. What are those sectors telling us right now?
Well, these sectors started the weakness like a week or two before the S&P, and the S&P hasn't really, shown the same type of pattern. And if you look here at some of these patterns, they look like they've already been in the process of building these head and shoulders tops, where you have the left shoulder here, head there. This was one area to get stopped out, bounced back up, made a lower high, came back into the neckline, and had a feeble bounce yesterday, still below the moving averages. So if these type patterns start triggering, because in order for these patterns to trigger, they have to break and close below the neckline, which is right here. Then all of a sudden, I think that the weakness won't be able to be ignored, and then you have the gap that started 2013 and the 200-day. That should be the next stop. And quickly, I'll show the chart of the home builders. Very, similar, a leading group that's helped support this rally for the past year or so. Here's a trend line that we've been holding, since last summer, that it's getting pretty close to breaking. And again, you combine that with a potential head and shoulders pattern here, and it's something to be a little bit more focused on, especially if you're a longer term trader, or macro investor. We start breaking below 28. There's no reason why you can't get a move down to 26.15. So you might want to take some risk off, hedge yourself if you're in the home builders, or if you're a trader, look for that short entry. Well, there are stocks that still look good out there. Seems like money is still hiding in big multinational companies. It'll be interesting to see if that trend continues. Yes, like you look at the chart of Pepsi, still looks good. You go here, a lot of money seems like it's hiding in some of these multinationals, and this is still above the 8-21 day. Looks like it can continue higher. So I would watch to see if that continues, because if money starts leaving, Pepsi, or even just say Walmart that's been following the 8-day, or even something like a McDonald's, you could see some weakness in the S&P start to develop. And LinkedIn's also looking good right now. It gained 4% yesterday, plus it's trading above all key moving averages. Do you think it still has more room to run? We still have a couple more weeks till earnings there. Yeah, this one, chosen one, macro investors, I would continue just to stay with this. Traders lately have been a little chopped up, but overall, you look at the pattern here, this has been one of the stronger high beta names. It's still above the 8-21 day. I'd say the longer it stays above 175, the more traders could be focusing on it, to build another area to go. I thought it was somewhat healthy that it did make a new historic high again in the midst of where high beta names haven't been doing that. But it's been a long run. I would say, if you're planning on being in LinkedIn for the next 3 years, do not worry about it now. If you're trading it from an intermediate basis, it still looks like one of the chosen ones.
And another stock that's looking good is eBay. It's been holding in well through the market weakness. It reports today after the close. We'll have to see how earnings come in and if the stock can keep going.
Yes, and as you can see, a lot of these things that have been coming out with earnings are not getting much excitement. So eBay just came a long way from that analyst meeting. You know, you look at the chart, it still does look good. It looks like there is money there and it's holding higher. You know, this was your pullback to the 200-day, which shows you that stocks could pull back to the 200-day and still, you know, regain footing and go. At this particular point, though, just with earnings after the close, just make sure you know your time frame. You know, a lot of people are very excited about hearing the results, and if that's the case, you know, perhaps it can make new highs. For me, I'm not going to have any position in eBay going into it, but if it trades after hours and gets above 58, you know, maybe I'll trade it. But again, it's just going to be for cash flow and not for anything too big.
And while we're talking good-looking stocks, we should mention Johnson & Johnson, which broke out on good volume yesterday, made a new all-time high of 83.54. Looks like bullish sentiment still staying intact there.
Yes, another reason why, again, markets, you know, seem like they correct a little bit, but especially in the S&P, they don't. And this has been a good group. It's been a strong group. You look at J&J, and at highs shows you that, you know, not every stock is created equal, and, you know, there are specific spots to be, you know, a bit longer, and some spots that even with the broader market not pulling in to be short. So just keep doing, you know, your homework and moving around.
Well, earnings continue to roll in this week. We're going to go in the trenches with some of those names, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with earnings this week. They continue to roll in. The banks have been an interesting case. It seems the street have very high expectations for the banks. We had JP Morgan, Wells Fargo, Goldman all report solid reports and then trade a bit lower. Same case with Bank of America this morning.
Yes, I would say JP Morgan, Wells Fargo, and Goldman were all solid, and none of them really, you know, had decent moves off them. So it shows you that maybe they came too far too fast, and that they could be in a corrective process. And as far as this morning, you know, Bank of America did come out. There are people who are reading it, you know, half glass full, half glass empty, either which way. You know, you look at the chart, it's come a long way from, you know, $8 and then from $9.95, and I don't think the report was enough to perhaps trade it through $12.75, which is what I was looking for. Okay, I was looking for a little bit more follow through, which didn't happen. So I did take some extra options into the close, but risk is premium paid, and, you know, once you do an option play into earnings, if it's wrong, you're going to get a zero, which is exactly what my Bank of America options will be. But anyway, as far as the stock, I still have some on. And I feel like 1164 would be an area that I think would be constructive to hold. But if the market doesn't hold in there, you know, and some of these banks that had better reports or more solid reports start to sell off a little bit, you know, it could come all the way into, you know, this 11 area. And then at that particular point, maybe the 200-day catches up. So, you know, I would just know your time frame here. I do not think the 1273 is the high of the year. It's just that this report today, probably not enough to get it there. And if you want to take a quick look at Goldman Sachs, you know, it had a solid report, you know, opened up, traded lower. Just as a clue for the overall banks, if Goldman Sachs starts to take out 140-ish, okay, to 142, you could see more overall weakness in the banks because, you know, this led us up, you know, this entire way. You know, so this at this point seems like it's, you know, leading us down a little bit. So watch that and keep your eyes out for the broader indices.
All right, and over in tech, YHOO reported yesterday it beat on earnings, but reported revenue that disappointed. It broke below the 8 and 21 day. So where's next for support that we're watching?
I think this one, sometimes it just irks me when, like, even Barron's, they came out over the weekend saying, oh, we expect another, I don't know what they said, 30% of upside or something like that to YHOO. But meanwhile, YHOO, the price to buy it was $16.60 when it broke out last year into the fall. And then recently at like 21.75, right around here, this was your add-on play. Here was your 16.60. Here is your add-on play, trending higher. And then this is when Barron's comes out positive on them, okay, after a huge move. So anyway, not to, it happens, I guess. But anyway, the earnings weren't perceived to be enough as revenues were light. I think Yahoo's come a long way. I like their business model, but I think that the report wasn't enough to get it excited. I did buy some in-the-money calls right here just to be involved because this was part of our 2013 thesis. That probably will be a 0-2. Great. But anyway, I think overall, if you're not in it and you sold into it and you don't take stock into earnings, which we typically don't, I think at the 50-day, which we haven't seen since all the way back into January, this will be a spot to nibble back Yahoo. As if I don't think this could be a short-term top, but I don't think that it's going to be the overall top in the stock.
Also reporting yesterday, Intel reported a 17% drop in first quarter profits on slumping PC sales. Came in line with expectations, though, and the stock actually rose 0.2% in after-hours trading. So how does the composure of this stock still look to you?
It just still looks like it's dead money, but people want it to wake up. A few weeks ago, they wanted mega cap to finally wake up because everyone's getting zero in the bank. So at least with like an Intel and a Microsoft, if there was some type of positive just a smell of anything positive in either of these reports, it seems like people want to put some money there. And from where it was in April, May last year at 29 all the way down to here, people have left it somewhat for dead. So with that being said, I think money would like to go here at this point. The report might not be enough to get it going, but I think the longer it stays in this channel, at some point later this year, it starts getting above 22, and that's probably when I would get, I would buy some myself.
Well, speaking of Microsoft, the company reports on Thursday, and of course it had a big sell-off last Thursday on slumping PC sales numbers. It has since been able to climb back above the 200-day, but how shaky does this look heading into earnings?
It looks pretty much the same as Intel. Maybe it was bid up a little bit more. It looked better until Goldman put that note out about the PC sector, which everyone knows there's no growth in the PC sector, that you have to have a handheld device. People have 3 of them now. Just a question of whether Windows 8 will be on a lot of those or whatnot. Anyway, a lot of cash, yield. At this point, there's nothing that compelling about the pattern. You do have this gap in front of it that, as a trader, sometimes it looks good to get filled for cash flow. But, if you're going to do something into it, again, there's really not that much premium in Microsoft options. So if you wanted to bet on Microsoft, I would buy like an in-the-money call, buy like the 29 calls or something like that. And, if there's something pleasantly surprising in there, it could go because, again, people would just like to hear something incrementally positive from these mega caps.
Very true. All right, time for some quick hits here. Let's talk Apple. Held that key 419 level that we talked about yesterday, and it actually bounced. So it closed at highs. Maybe we'll get upside follow through today?
Perhaps. I think the weakness in Intel and the weakness in the overall market, plus there was news that their shipments were lower, and I think pre-market was a 421, so I might try it again. But the funny thing is with traders, including me, I tried to fade it a little bit yesterday because it looked as if it was going to break, and I got squeezed and I got away from it. Now today might be the day it breaks at 419, 420, but it's coming from $5 higher, so it makes it trickier, which is why the market's been frustrating, because they're making every trade tricky. Not easy, but I guess if it was that easy, we'd all be on the beach and in the mountains like I was 2 weeks ago. So with that said, just because you tried Apple yesterday perhaps and it didn't work, if it does break below 419, 420 and holds below that, you could get a quick move down to the low 400s, and then we'll revisit it around earnings. If it holds it, just avoid it. It's been a very noisy trade.
And First Solar, if you remember, had that 40% move on April 9th. It's holding on to gains from it pretty well. So how bullish does it still look to you?
This one, I don't love the group, but you can't really argue with the chart. You look here, there are a lot of shorts trapped. You go to the chart, you'll see this was a huge move, holding higher, green day yesterday. Let's see if it could buck the weakness. I'm in small. If it starts getting above 38-ish, perhaps it's an add for what could be a decent cash flow trade today. It's on my radar, but I'm not sure what's going to happen with the market weakness, but we'll see. As long as it stays above, I would say 36, I think my traders will still continue to focus on this potential follow-through on this pattern.
And Amazon erased Monday's losses yesterday with gains of 1.7%. Before that, it had 5 winning sessions in a row. So, perhaps this is proof of strength of this stock.
Well, this, kind of like LinkedIn, has been one of the chosen ones. It's hanging in there, but earnings are going to be coming out soon, and that's what's going to ignite or resolve this pattern. As of now, decent move from support. A lot of guys were looking for it to be weaker, and it didn't. It held, and then it traded through 267. It's holding it. and I don't know what the market weakness, if it's going to start taking out 275. I guess if the market did find its footing today, this is something to watch to see if it can go green. And then, earnings time, we'll be watching this pivot, which is historic highs. It's gotten so many passes through earnings. Everyone always saying, oh, it's a margin story, it's a margin story. Once their margins get a bit better, their earnings are going to get ramped up. Still hanging around. You look at the monthly chart on Amazon, and it's something that's been a stock picker's dream. And here we are setting up again above the 8-day, so there's money still there. We'll see what happens closer to earnings.
All right, well, tell us, wrap it up for us. What will be your strategy heading into today's trading session?
With the futures down 12 handles, I'm actually coming in short the spiders. The question people have, should you cover your short in the spiders, or is this the time when you could press for a gap and go to the downside? And anytime you've pressed shorts on weakness, hasn't really paid you. So what I'm probably going to do is I'm probably going to cover some of my shorts, see what goes on with Bank of America, see if I could buy anything for cash flow to go green. And if not, I think the market's vulnerable. I'd like to be short, which I'm not really that good at. But, again, down 12 handles, it's not going to be the easiest setup to add on the open. So let's wait to see what happens in the first 45 minutes to see if everything is still relatively weak or if some groups go green to lead us off the lows.
All right, and with that said, happy trading, everyone. Have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.